Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the supply in profit or loss. So, of course, we are putting back on our on-chain analysis hat. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out Into the Cryptoverse Premium at intothecryptoverse.com. We are relaunching the sale for a holiday sale, so if you didn't get it in November and you want to sign up, you could do so now through the end of the year. So make sure you check it out. Link is in the description below or the pinned comment. We have plenty of different tiers that you can sign up for. Now, this is actually one of my favorite indicators, the Bitcoin percentage of supply and profit and loss. And one of the reasons I like it is because of how easy it is to understand, right? You look at the chart and you can see this cyclical behavior of Bitcoin, right? It doesn't take much effort to really see how it ebbs and flows, right? How the market cycles of Bitcoin ebb and flow. And in the same way, in the peak mania phase, it can often feel like the price will never go down. In a bear market, it can also feel like the price will never go up, right? And so we must constantly be careful about getting too comfortable with any one path, especially when you're on that path for a long period of time. But if you look at this chart, what you'll notice, let me explain it a little bit. The line here at the top is the percentage of supply in profit for Bitcoin. So when it's pressing to new highs, of course, you basically have 100% in profit because, of course, anyone who's bought Bitcoin at that point would be in profit. But when you come down from those recent highs, of course, you'll see it come down. And when you get into those deeper bear markets, the percentage of supply and profit comes down quite a bit. In the same way, the percentage of supply and loss goes up a lot in bear markets. Okay, so one of the things that is useful to really understand here is that the market cycle bottoms come once these two indicators cross, right? After they cross. Furthermore, we could apply moving averages and figure out, how long does it take for them to cross? Remember, moving averages are lagging indicators. I mean, it's basically in the definition. If you're taking a long-term moving average of something, it's going to take a certain amount of days for that to be reflected in that moving average, even after that price of the asset makes a specific move. But when you look at it like this, it can be hard to really discern what's actually going on, in this time frame. So what I've previously done is we just take a moving average, like a 30-day moving average, a 30-day simple moving average. And what you notice with this, and we've talked about this many times before, is that the major bottoms for Bitcoin have occurred after these two metrics crossed, right? So let's break it down. Don't take my word for it, right? We always have to verify, right? As they say, right? Don't trust, verify. If you look back over here in 2011, you'll notice that they crossed October 21st or so, maybe October 22nd, but we didn't actually see a major bottom on the daily time frame until November. So what do you notice? It was after these metrics crossed, right? After they crossed and were still crossed and had not crossed back yet, that you actually found a market cycle bottom. They were actually right on the cusp of crossing back up to the downside when we actually got that bottom. If you continue on to 2015, you'll notice that they briefly crossed right here in October, but it was sort of like a fake out, right? And then they went back down for a little bit, kind of flirted for a while, but you didn't see any real commitment until December, about 2 months later. What do you know about that bear market? If you remember, that bear market did not end until January 14th of 2015. So I will remind you, the bear market started in November of 2013, really the very end of November. Depends on where you take the wicks, right? If you take the hourly wick or you care about the daily closes, whatever. But it basically started in November. The bottom was not until January. So the bear market actually lasted about 14 months. Okay, it lasted the last month or so of 2013, all of 2014, and a couple weeks into 2015. But what you'll notice yet again is that this market cycle bottom did not occur until after they had a meaningful cross, and it stayed that way, right? I mean, it wasn't just sort of like a very brief cross where it then crossed back down, showed real commitment to the cross, and then we got a bottom. And you go out to 2018. You see the same thing, right? there wasn't really a struggle to see the cross, right? It crossed in December, but December 6th or 7th of 2018, market cycle bottom occurred, December 17th. I believe it was, the 15th, 16th, 17th, somewhere in that time frame. Depends on if you care about daily closes or hourly wicks, whatever. But again, it occurred after they crossed. So then we talked about this before. This is one of the bottoming indicators. If you guys have watched the series that I put out occasionally called, Bitcoin, the bulls versus the bears, and we go through and tally up all the different indicators, this is one that is really, has been holding out, right? And it had not yet triggered. And so we'll provide an update for it right now. Where is it? What you'll notice is that they briefly crossed for like one day. One day. December 7th of 2022, right? You can see they basically crossed for that one day, and then they came back down. That's not that dissimilar from what we saw back in 2014 in October, which was also a double peak cycle that started, and the bear market started in November, and it went through January, right? November of 2013 to January of 2015. And again, you saw sort of like a very brief cross. Then we actually finally got it a couple months later. Between that time, though, Bitcoin had a sizable pump, actually. I mean, if you actually take a look, the price went from like $324 all the way up to $421. Now, that might not sound like a lot, but that's actually quite a move, I mean, it's like a 10% move would only be like a $32 to the upside, which would have gotten it, to like 356 or so. So you're talking about a fairly sizable move to go from 324 or so all the way up to 421. The problem is that it still was not the bottom, right? It still was not the bottom despite that move to the upside. And despite the fact that they had temporarily crossed, we actually had not put in a new low. You can see the low here was in October of 2014 at around 322, and then this one was at 324. So during that initial cross, we didn't even see a new low. Then later, we actually did see a cross of the supply and profit and loss, and we got our major market cycle bottom. Not that dissimilar from, what's happened recently, right? You have a cross, but we haven't actually seen a new low. The price, the lowest that Bitcoin went during this very brief period here on the daily time frame, of course, was just 16.85K. We're actually lower than that price right now. And if you look at it, if you look closely at the 30-day SMA, it's actually slowly starting to curl back up. It's not curling up yet, but you can see the rate of change, right? Like the angle of attack is starting to come back up a little bit. It's leveling. It's trying to level out. And one of the reasons for that is just simply because the people who bought Bitcoin, recently at like 18K, when it went up to 18K and everyone YOLO'd back in, right, to every bear market rally in the bear market, what happened? Now all these people are now sitting at a loss, right? They're all now sitting at a loss. And so, that contributes. And so if Bitcoin keeps doing this, right, then more and more people will be sitting at a loss if every time we have these bear market rallies, we then just simply come right back down. So interesting observation, right? And again, every bear market's going to be different, and I don't want us to pretend like they're going to be the same. We're using the context of history to show us what can happen, not to show us what will happen. I've found oftentimes if we don't understand what has happened in the past, then we are simply unable to plan for a potential repeat of that same scenario. It doesn't have to play out the exact same way, but it doesn't mean you shouldn't plan for it, right? It doesn't mean you shouldn't plan for it. It's the same thing with the last bear market in 2018. Bitcoin put in a major low in June, and then it put in higher lows until November or mid-November, and then the floor fell out. And we talked about that, right? We said, look, June's probably not the bottom. It's probably doing the same exact thing it did in 2018, and we're going to see a move down in November. And sure enough, we got a move down in November in the same way. And, I know people like to call it a black swan, but the reality is it's just a bear market, right? It's just a bear market. And bear market things happen in bear markets, right? Because asset prices go down. In this situation, the Fed, they're raising interest rates, they're exposing the fraud, they're exposing the zombie companies. Again, it's just an artifact of a bear market. You can always look for reasons to sort of, try to assess why it happened. But the reality of the situation is just simply a bear market, and in bear markets, the price generally goes down, right? You don't have to come up with a narrative for every single thing. But this first cross over here, October. Second one, December. Bottom was in January, right? So it was October, December, January. Today, first cross, December, right? It was actually December. Now, if you were to go 2 months out from that, it would actually put you in February. And then the market cycle bottom based on that recent pattern would actually be in March. So again, I'm not saying it has to play out like that by any stretch of the imagination. But with that said, would it be foolish not to potentially plan for such a scenario? I think it probably would. Therefore, probably makes sense to at least plan for it and be on the lookout for it. Another way to visualize this, by the way, is to look at a 50-day SMA. And the reason why I say that is because, yet again, it almost always occurred before the bottom, okay? Even a 50-day SMA. You might say, well, why does he care so much about these long-term moving averages? The reason why, and we've talked about this a few times, is the time-based capitulation of Bitcoin is probably more important than the price-based capitulation, right? If Bitcoin were to drop to the market cycle bottom tomorrow, and then we just went up from there, it'd be easy, right? It'd be smooth sailing from that point. We might get scared a few times by price drops, but if we saw some type of major capitulation that wiped everyone out, then that's usually what a lot of longer term crypto investors look for. We got it in 2014, we got it in 2018. We've sort of had it somewhat in 2022, but it's just been a very slow step down. No major 50% capitulation here at the end of the year, not yet anyways. And so if you look at the 50-day SMA, what you'll notice is that, again, in 2011, cross, bottom came later. 2015, a cross of the 50-day SMA, right? Very brief cross here, and then it committed to it later on. Once it was actually committed and over it and stayed that way, we got the market cycle bottom. The only one that's not, but it came relatively close. If you look at 2018, the actual cross occurred on the day of the market cycle bottom, or maybe a day after. I can't remember. It literally looks like it's like 1 day later. This price here was, and again, these are daily closes, so it might even be worthwhile to go see where the actual bottom was. So let me actually go back to the daily time frame and go back all the way back to 2018, and let's find the wick. So it was December 15th, the day that had the lowest wick and I guess lowest daily close as well. So December 15th, going back over to the supply and profit and loss, this was December 15th. Okay, so they crossed 1 day later, so it would have missed it by 1 day. Okay, but the point is that every single time they eventually crossed, right, which would have really represented a pretty sizable move to the downside, and a lot of investors still feeling pain every single cycle, right? This was very brief, a longer cross over here, pretty long cross over here. Right now, they're still pretty far apart, right? So if you take the 50-day SMA, the supply and profit is 52.49%. The supply and loss is 47.51%. This, again, is the 50-day SMA, not the instantaneous. And if you look at it and you zoom in, they are actually converging now, okay? You can see that they're starting to converge. One way that I like to look at this, and you can kind of see that while I still think it is unfortunately a bear market, right? It just is what it is. You can see the bears are losing steam, right? Each new leg down, so the first major leg down, bears had a ton of momentum. Second one, still a good bit of momentum. Third one, some momentum, right? Fourth, the momentum's really starting to slow down. So the bears are slowly losing momentum as we get deeper and deeper into the bear market, but that's not dissimilar from what we've seen in the past, right? Those first leg downs, major momentum, they lose momentum as we get further down, and then eventually the bulls sort of offset the bears. We get into that long accumulation phase, as you can see right here, and then we build out for the next cycle. Again, same thing over here, right? We get into this accumulation phase, we build out for the next cycle. So far, we haven't really seen that cross. And I know it's difficult, right? I understand the time-based capitulation component is so difficult and so hard, and it makes you get apathetic, and it makes you, think all sorts of things related to crypto and whatnot. But despite everything, right? Despite everything that crypto has gone through this year, not only with, things with Celsius and FTX and Luna and all of that stuff, right? And BlockFi even more recently, and all the FUD going on today, despite, and even a recession potentially coming up, right? Despite all of that, so far, this is not that dissimilar from what we've seen every single bear market, right? It's not. It's not. And, it doesn't mean that it won't diverge at some point. I'm sure it probably will. But we have to remind ourselves that, as bad as it feels right now, it still has not deviated from what we've seen in prior Bitcoin bear markets. In fact, up until this point, this bear market hasn't even been as bad as some of the other bear markets. And it's not even because we haven't had enough time. This bear market's been going on for 13 months, right? The 2018 bear market only lasted like 12 months. Now the 2014 one lasts about 14 months, and so we understand that it could still be a little bit more time. But I'm saying, look to some of these longer term moving averages of the supply and profit and loss. And when you see them crossing, assuming they do cross eventually, that historically is the accumulation phase for the next bull market. Okay. And this is why, I've been pretty adamant this year. Cash is king, right? I mean, like we can talk about, I know people like to talk about altcoins and, what altcoin gems exist and all that sort of stuff. But guys, in a bear market, it's noise, it's irrelevant, it's all just hopium to get you to buy back in, so the market sucks in more liquidity before taking another leg lower. And I'm telling you, while we are getting further into the bear market, we are getting a bit deeper. You can see that this accumulation phase of seeing these two moving averages at the supply and profit and loss cross, normally they mark the accumulation phase for Bitcoin before the next bull market. We are getting relatively close. And on the 30-day, they actually did briefly cross, like in 2014, but we haven't really seen a major cross of these two moving averages, not just yet, right? Not just yet. Another way to visualize this actually is to take the moving average out and only look at the supply and loss, and you can kind of see. You can see where this one came up back in 2011. We still haven't gotten to that level yet, but if you look at 2014, 2015. And if you look at 2018 and early 2019, you'll see that, you can kind of see just how high up the supply and loss got. And then you can see where we are today, right? So if I were to just sort of hover here of where we currently, the current high is on this, and you can sort of see the line go across the page, you'll see where we are in the context of every prior bear market. And you'll notice that in every prior bear market, the supply and loss actually went a bit higher than it is today. Doesn't necessarily mean anything has to happen. I'm just, making this observation, and you can do with that what you will. But I think this indicator is pretty interesting. What do you think of it? Let me know in the comments below. Do you think they'll cross? Do you think they won't? Yet again. And again, we do have we are running that holiday sale on Into the Cryptoverse Premium. Again, we have several different tiers. One of them is even free. So again, check that out in the description below and the pinned comment. Thank you guys for tuning in. Make sure you subscribe if you're not subscribed. Give the video a thumbs up. And I'll see you guys next time. Bye.